All right, we are live. Welcome everyone to the Mr. Rent-to Own Home Show. My name is Dominic Danino, aka Mr. Rent-to Own Homes. If this is the first time you've been here, welcome. Uh, and today's topic, we're going to talk about why agents and lenders should learn more about rent-to-own home programs, right? And there are a few different programs out there, but we're going to dive deep into the differences between ours and some other ones. And then how this benefits you, and considering what's happened with NARA decision, it's more important now that you add more tools to your tool belt. And today I'm joined by James Brown, real estate investor, agent in Colorado. So welcome, James.
Howdy ho. I was going to say too, people that are watching live can comment on Facebook and we're streaming to YouTube, right, Tom?
Yep, we're streaming on YouTube. Yeah, and if you're in Facebook, in one of the Facebook groups, you have to give StreamYard permission to access your name and profile, so we know when your comment comes in that it's you, and we know who to address it to, right? So StreamYard or Facebook will give you a message say allow StreamYard to access your Facebook.
Good point. Otherwise, picture. We're just going to call you a Facebook user.
Facebook user, that's right. All right, buddy. So it's March Madness, right? You got any crazy March Madness stories?
No.
No.
I don't
Anybody
follow
doing much work today? Because in the March Madness, everybody's just watching games, right?
I don't.
No.
I don't follow. Right. I don't mind watching some basketball once in a while.
Yeah. Well, back in the day in the corporate world, I used to kind of keep up a little bit more. These days, I haven't. But yeah, I got a bunch of March Madness stories. But anyways, it's March Madness. So, and we're also on full-on, busy season, right? This is the buying when spring starts, buying season. Typically, if people start looking to buy a house, move, they're already making their plans as, the school year starts to get towards the end. People are starting to plan, okay, I got to move the kids, or where am I going to move to, right? And then in some of the colder weather areas of the country, right? Got springtime, maybe some parts are still getting a little bit of snow, but people are already starting to think about moving, right? And just kind of doing some running out in the neighborhood. I kind of seen a few more properties pop up for sale, right? So this is the time of the year where people start putting up their properties for sale. So it's full on, right? But as it relates to, so it's full on shopping season, and people want to buy. It's probably a good time to buy because there's some changes coming to the industry. Rates are still hovering around 7 for conventional conforming rates. But today we are here to talk about why should agents and lenders get familiar with rent-to-own programs. How rent-to-own programs work with agents and lenders, what's the benefit to them, right? And more specifically, how our programs work, right? And some of the guidelines, parameters. I also want to address some of the misconceptions out there, because just like anything else, there are a few other companies out there, small and big, right? And then some, Joe individuals that have properties that they do a rent-to-own method, that it's different than ours. So not every rent-to-own program is the same, right? Yeah. Just like FHA and conventional VE are not the same, even though they are loan programs, they are different, right? They have their different guidelines, different qualifications, and different people that fit into those boxes, right?
Yeah.
So what are you seeing in your market as it relates to spring season and whatnot? We've seen more listings go on the market.
Yep. Starting to kind of break free a little bit, but it's still a balanced market. Like those rates being high, it's kind of slow. Some properties, like I'm going to go do an open house for another agent here it seems priced well. I mean, I just kind of got a little quick view of it, but she's like, it should be going. And normally, like during COVID, that thing would have been flying off the shelves, especially at the price point. So,
yeah. So you mentioned rates being high. I say rates relative to how they've been,
yeah,
last 48 months, probably it's relative, right?
the
Because,
disparity is the problem.
when I started in this business, I was originating on the phones, and we were at 9.5, 9.75, right?
Yeah.
And that was what it was, right? So there are cycles to this. So everybody's been pretty spoiled, right? And that, being, it's great to get 3.5%, 4% or whatnot, but that's the outlier rather than the norm,
Right.
right? That's the outlier rather than the norm. And so the Fed met this week also, right? Talking about rates. There was a Fed meeting this week, and basically they're making no changes, and we could probably continue to expect no rate cuts. Probably, I'm guessing, probably maybe late summer, maybe even past the election. Who knows? Right? Maybe fourth quarter, but I'm not expecting anything. Right? So the job market's still pretty strong. We still have low unemployment. Looks like inflation has come down somewhat, right? I was looking at price of oil. Oil is around $80 a barrel this morning, right? Crypto took a little hit this weekend. I don't know if you saw that, but crypto took a little hit. Still hovering in the mid 60s, which is, it's had a nice run up since the beginning of the year, right? So I'm not a crypto bro, right? But I follow stuff. It's the trends that come up, and as these cycles come, you see, when crypto was in the tank, nobody talked about it. Now everybody talking about it again, right? And it's like, to me, it's like you're just chasing and chasing and chasing, right? To me, I like it. Steady, consistent, right? And that's really what we talk about when it comes to real estate, is because you can't eat crypto, right? You can't live under crypto, right? You can't live in a coin, right? It's not going to protect you in bad weather, right? So, I mean, I think housing in general, we understand that there's a shortage of housing. Population growth is still happening, and shortage of houses. They're not building as many, right? And that's just the reality. Housing is tangible. Housing is tangible. You can touch it, you can feel it, you can live in it, right? But there's a cost to that, right? We all need shelter, right? Some of the basic foundations of survival is shelter.
Yeah.
All right, let's get into. So let me ask you this question, right? Yeah, I know. Why agents and lenders should learn more about rent-to-own programs? Like when other agents ask you, it's like, well, what do I care? I'm just doing my own thing. I'm still doing traditional stuff. Why? What do I need to do that? Why do I need to do all this?
Well, good question. There's a lot of people that can't qualify for loans. There's a large portion of people that can't qualify for loans, but some are close, and that's where we can help people through rent to own. There's a lot of opportunity out there. Let's talk, I guess, who is ideal is really self-employed people. I mean, it can be anybody that can't qualify, but they're close. But if you know anybody that's self-employed, contractors, they got cash businesses, maybe they weren't claiming enough on their taxes, too many deductions, all those kinds of things. So those are kind of ideal. So being aware of who's a good fit is a good start. And you can go out and market for that once you know the different programs that they fit in, right? So you're kind of seeing ahead and add this to your toolbox to be able to help people that don't fit the box of being pre-approved and going and showing them houses. So want to add anything to that? No?
Yeah, definitely, right? So 2 points, right? You brought up who's a fit. And so for our rent-to-own program, we're looking for people that are going to have skin in the game, right? This is not a no money down, This isn't Section 8. This isn't a free house. This isn't, I have no job, I have no money and bad credit. Can I get a house? Right? That's not what this is. Right? And I think general perception tends to be, oh, rent to own must be people that have bad credit, right? They're just really renters, right? So our program, I like to define it as rent to own, not rent to rent, right? We aren't looking for somebody that doesn't want to own, right? This isn't, hey, I'm going to test it out for 12 months, 6 months, 12 months. If I like it, great. If I don't, okay, I'm out, right? And I go back to living in an apartment or whatever. But that's not what this is. That's not how our program works. I know there are other programs out there that people say, yeah, okay, go test it out. And they're hoping that somebody says, yeah, I don't care. And they bring in somebody else, right? Because in those programs are going to take some form of money, some form of deposit towards the option of buying the property to test it out, right? So let's say they take, I don't know, $5,000 to test it out. And then the person in 12 months says, I don't care, I'm moving on, right? So they end up keeping that deposit, and then they put in a new person in there, and they are hoping that it just goes in circles and circles. Our goal here is to get them to own the house. So if they're thinking that, I'm just going to test it out, this isn't going to be it, you have to want the house. And the advantage of ours versus theirs is in their programs, they're going to have 1 or 2 or 3 or 4 properties that the people get to pick from. Our program is we're letting the person that can't qualify right now pick the house themselves. Yep. So these aren't ugly houses, right? They get them from the MLS. These are move-in ready houses. They're going to have to pass inspection. They're going to have to get an appraisal, right? All of that's going to be just the same as if it were a traditional transaction, right? So I like to make that distinction between other rent-to-own programs and this one. And then as it relates to who's a fit, people that want to own, people that are going to have skin in the game, but they have something right now that's keeping them from qualifying for traditional financing. And as you mentioned, self-employed people, business owners, entrepreneurs, with the gig economy, there's a lot more self-employed entrepreneurs these days, right? People are doing Uber, they're delivering food, they're doing all kinds of stuff, right? The old traditional way of people working has changed. The times have changed. The old traditional, I work 40 hours a week, 9 to 5 at a factory, and I get a W-2, and that's my life. That's not the way that things are anymore, right? So people get paid through we have new technologies disrupting the industry, right? So you have Cash App, PayPal, Venmo, what's any other ones, right? So you have all the ways that people get paid, right? So they get paid in cash, some kind of cash forms, or 1099s, and their income varies, right? It's not a steady, hey, I clock in and I clock out, right? The old traditional, I punch in, punch out, and then it's, a steady 40-hour work times 20 hours a week or whatever that may be. That's not how people get paid anymore, right? And so banks generally want those kind of people, right? They haven't adjusted to the new norm, basically, right? So for conventional and FHA and VA, they want somebody that has a steady and consistent income week to week, month to month, year to year, right? Yep. But if you don't have one of those kind of jobs, that's just not the reality. And you and I know, right? We're self-employed, so our income can go up and down based on what's happening month to month, right? Because you were paying, you get paid a 1099 or commission or whatever that may be, or if you have rentals, you collect cash flow, you collect rents, so that can vary. So it's not a consistent, always the same amount every month. Yep. So agents understand this, right? Brokers and lenders understand this. Real estate investors understand this, right? You have a lot of real estate investors that are doing, fixing and flipping, wholesaling, all these other methods. Doing Airbnb, they're doing midterm rentals, right? Hey, one of the things that people always preach on about getting into syndications and multifamily, cost segregation. You get to expense out all this depreciation versus your W-2 income, right? And there's somebody that's has a profile for that makes sense, right? If you have a corporate job W-2 and you want to offset your W-2 wages, then yeah, you want to take the depreciations as a limited partner in a syndication on multifamily or some type of commercial project, right? But so there's a method for that. But generally, the people that we're looking for is somebody is being turned down because they can't document their income right now, but eventually can get that all cleaned up, get it lined up, get it submitted, get it corrected so that they can get their own financing down the road. I know you're an expert on the divorce side, right? You want to talk about the divorce, how that helps people, or how rent-to-own helps people that maybe have gone through a divorce or in the middle of divorce. I know you potentially had a potential client that had a situation like this.
Yeah. There's a lot of times when people go through a divorce, they can't just go off and buy a new house or even take over the one they're living in as the other party splits off. So it may be a good fit with rent to own, be able to buy the existing house or a different house. So gives some options.
Yeah, there could be a couple of ways that could work, right? So parties are going to separate themselves. Well, I mean, did they decide who's going to get what yet between themselves, or are they going to go through the process of the court and do a formal divorce proceeding, or they can do a separation agreement that doesn't require the court? They can kind of decide or mediate that, right, and decide, okay, how the asset's going to be split. Well, usually they own a house together, then somebody's got the debt, or both of them have the same debt on the house. Then there's potential equity in the house. How is that going to be split? How do we get the equity so that the person that's departing, if somebody wants to keep it, how does the person departing get their portion of the equity in the house? Because maybe they want to go buy a house, right? How do you do that? A lot of times what happens is, okay, if they can't agree on something, then they go through the court. The judge is going to say, okay, either you refinance, get them off the loan, and get a loan to give them their portion of the equity, or you have to sell it so that equity can be divvied out between the two parties, whatever portion that they're going to get, right? So most people obviously don't know. Not everybody gets divorced every day, so they don't understand some of these things until they go through it, and now they're scrambling. Okay, how am I going to do this? And I've talked to personally a few clients that are like, hey, I'm getting divorced, and my spouse needs to get a portion of my equity. How am I going to get that to them, but I still want to keep the house? Sometimes it's viable, sometimes it's not on the traditional side, right? On the traditional side, you could potentially do a cash out refinance to pay a spouse for their portion of the equity, and you just need to document that, how much they're going to get, so that lien gets clear, basically. But you would still have to qualify for that payment of the new loan, right? Because it's going to be higher than what you owe now. If you got to give them $50,000 out of the equity, then if your balance is $200, you got to increase it to $250 to give them their money. Well, can you qualify for that $250? Maybe you can, maybe you can't, right? Yeah. Most people that are couples or married, usually when people qualify for a house, they're using joint income, right? They're usually, well, the majority of people are saying, hey, I make 100, she makes 100, so 200 together, we can qualify for, I don't know, 600,000. But by myself, I can't qualify for 600,000, right? So I got to come down to maybe 400,000. So how is that going to work out, right? So there's a couple of ways that we can kind of walk through that process, or kind of give somebody some ideas on how they can kind of work it out, right? If they haven't come to an agreement already. And those are the things that we can help through rent to own, because potentially somebody doesn't qualify for traditional, or potentially as they're going through that process, maybe there's a dispute. Like, oh no, that's your student loan. Oh no, that's your credit card. Oh no, that's you're responsible. Oh no, that's your car loan. You pay it. No, you pay it, right? And then while they're arguing or disputing each other, disputing who's responsible for what, they let the payments go, right? Because they're mad at each other instead of thinking logically. They're emotionally attached in the process, and they're mad at each other, and neither one wants to pay the credit card or whatever. And now that impacts their credit score and their ability to qualify, right? And then once everything's been settled, it's like, oh, I still want to buy a house. Well, you just ruin your credit while you're going through this, right? It happens a lot, right? It happens a lot. And these aren't deadbeats, as some people would say. Oh, maybe rent to own is for deadbeats, or somebody as they want to qualify that way. No, It's life events. Stuff happens, right?
Exactly.
Real life stuff happens, right? And they don't realize the impacts that it has when it comes to finance. The banks don't care. I mean, that you had a life event. They say, you got bad credit, or you had a collection or a judgment or a bankruptcy or foreclosure. That's your problem, not ours, right? We're not going to lend to you. So these are things that happen. So these are methods that we can kind of help and guide people as to, here are options here. You don't qualify for traditional financing. You qualify for traditional financing, then get that first. Go try that route. Once you're told no, then come to us, and we probably can find a different solution to your situation, right? We try to take an approach of problem solving. Anything you want to add?
No, you covered that really well. Yeah, there's so many things with divorce specifically that can get thrown off.
Yeah.
A late payment because somebody wasn't paying attention, or sometimes it's intentional. Maybe oftentimes it's intentional, like, hey, screw them, I'm not going to pay their car payment anymore. And don't tell them. And then, now we're in.
Yeah, somebody got kicked out of the house. They went to live with the brother or the cousin or the new boyfriend or girlfriend. If there was something like that happens, right? And now that they're mad at each other, it's like, oh, forget them. I'm not going to pay it. It's their problem, not my problem, right? So yeah, that's unfortunate, but it happens. Anyway, so we like to be problem solvers, and in a presentation that I do to real estate agents, I basically say, hey, if some of you may have gone through this yourselves, right? So take that as an opportunity. Instead of trying to be everything to everybody, why don't you niche down and become the expert at, say, hey, if you're experiencing a divorce, and you're looking to buy a home, or you're trying to figure out how to solve for this problem, call me. I'll guide you, because I went through it, or I know a way that we can work through it through a rent-to-own program if something happened with your credit or so forth, right? So become the expert at it, and you could market to that, right? So you talked about marketing not just to rent-to-own, but even further, and say, okay, I want to be the divorce expert, right? Because not everybody knows, right? So somebody says, hey, I'm going through a divorce, and you're an agent, and it's like, okay, so go get divorced, or go figure it out and let me know after the fact, right? Instead of trying to help them along the way, and now you have a client, become the expert at that. So yeah, that's a specific niche that somebody can use.
Yeah, it just reminded me that I've had some people like where maybe the husband's a breadwinner, and trying to help the wife by making some payments for her. Will that actually hurt her ability to go get a loan in the future? So he had the best intentions, like an amicable kind of divorce, but ended up not really understanding the whole process and seeing ahead of time what he really should have been doing. So that's where it's good to get your clients with somebody that knows. In this case, I've got a lender that's here in Colorado that's certified as a divorce lender, and could have helped those people if they'd talked sooner. So anyway.
Yeah, so let's address that, or I want to ask you about that particular lender, right? So what makes this person a certified divorce lender? What does that mean?
Well, yeah, there's actually a designation for lenders to be certified in divorce, because there's so many, unique things about that. But as you were saying before, some of us have been through things like that, and she had been through a divorce, and that's, it was nasty, and it sent her off this path. So that's her niche now, is really diving into that. So.
Yeah, I mean, that's definitely a way to niche down. You become an expert at something in your field, right? So not just your field, but in your subset of your field, just like it would be with agents, right? So we like to kind of see ourselves as experts in the creative aspect of how do we solve a problem that isn't solvable by traditional means, right?
Mm-hmm.
Right.
Well, and I mean, I've been in the position where what I do as a company, I was a good fit for that. Like, I couldn't go get a traditional loan. Self-employed, new real estate agent.
Yep.
I was a good fit for it. So I can relate to people.
Yeah, I'll say it too. Like back in 2008, I did a short sale on my house in 2008, right during the financial crisis, and I would have been a fit for rent to own too because I couldn't get a new financing for a few years, right?
Yep.
So doing a short sale, right? So life events happen, right? You know, the industry fluctuates, right? And it's fluctuating right now. A lot of people have equity in their properties because of the run up in values, but sometimes they need to access that money to do whatever it is they got to do, either pay bills if they got behind, or they got to pay off the spouse, or something along the way. Or maybe, I mean, right now unemployment is very low, but let's say they had a situation where, I don't know, in the tech industry, there's a lot of layoffs happening in that industry. Like, okay, I got no income, but I have a lot of equity. Not a whole lot you can do with the equity if you can't access the funds. All right, so that's another solution that we can potentially provide, right? Creatively say, hey, here's a way you can access the equity. First, you try to, if you can qualify for a home equity loan or traditional financing, then yeah, you could try that route first. But if not, then we can be a solution for you in multiple ways. Potentially, we could buy the property. Potentially, we can buy the property and rent it back to you. Potentially, we can say, hey, your income was, I don't know, 100,000 before, now it's 60. Really, you can't afford this house anymore. Really should be selling it and kind of sizing down into a smaller house, maybe a condo or something along that you can't afford, right? That's just the reality of life. It doesn't always go up. Sometimes you got to take a step back and then kind of reassess and get settled, and then you move forward, and then you go back and growing again. All right, so that's just life. And then people, that's not a bad thing, or people shouldn't feel bad about that. It's just, stuff happens. Right. So, but the thing is, how do we move forward? How do you solve for it, or how do you continue working forward? Right. You can't just kind of quit. Right. You're not quitting on life. We talked about who's a fit, right? So self-employed. We talked about life events like divorce, right? Illness. Oh, you got an illness, and you're out of work for a few years or a period of time, and a car accident, right? I mean, you never know. You could be the healthiest person. But if you're driving or you're riding your bike and somebody hits you out of the blue that has nothing to do with you, or somebody ran a red or whatever, get into a car accident. That's nothing you control. You didn't do anything wrong. It wasn't mismanagement on your part, but that's somebody that could get into a situation where a life event happens. I can't pay the bills. I'm out of commission. I can't work, or I only get paid when I work, and I don't have like an insurance plan at my job, or my job doesn't offer that, where I'd have a disability and then I'm out. And maybe the disability is only if it's job related, but if it's a car accident or you went hiking and you fell or something, then it doesn't pay you. So who's paying the bills, right? Sometimes that happens, and people got to do something, right? So those life events happen, and then we could potentially still get them back on track, helping them on either a new property, or do something with the property if they have one now that has some equity in it.
Yep. Yeah. And those life events, like we were looking at everybody's story. Like, why are they in the position they are now? What is it going to take to get qualified in the future, or again qualified if like they are in a position where they can't afford it right now or whatever. So we're looking at that. And then also, as we dig in, we might see that it's not just life events. It's just somebody's maybe bad with money. Well, we'll see that, and be selective,
it's definitely not a fit for everybody, right? I talked about this isn't a rent to rent, and also, right, we're okay with life events. We don't have a minimum credit score for our program. That's one thing that's different. Right? We don't have a minimum credit score. However, when we look at your situation, is it a life event that we can document and say, yeah, between this month and this month, your story makes sense and it matches up. But if you're a habitual person that isn't good at managing their money or making their payments because you're consistently late, regardless of what's happening, and you just careless, then that's probably you're not gonna be a fit for our program. That's not the type of person that we can help with that, right? They need either financial management counseling of some type, or somebody how to manage their finances better, and they should be taking a class on that. But if you're a habitual, because you're just disregarding, but you have the means, nothing's happened to you, you just choose not to because you're, I don't know, whatever that may be. There are people out there that way, right? So those would not be a fit, right? We're looking for one-offs, life events, but we, as I said, we don't have a minimum credit score for a rent-to-own program, right? It's like, what's your story? Can you put skin in the game? Are you willing to work towards fixing what's keeping you from financing, for qualifying for traditional financing? And then, can you make the payments for the property that you're picking out, right? We're not saying, hey, these are our 3 properties, pick one of these properties that we got here, right? No, you get to pick it, but it also has to make sense that you can afford it and make the payments.
Yeah. Yeah.
All right. Who else can? Who else? What? So we talked about the life events, self-employed. We talked about divorce, right? How about potential relocation or new business owners, right? People get relocated from jobs. No, they're got to relocate it from one company. It's like, hey, I got a job offer maybe in a new industry. In the lending space, they'll let you get financing with a new job, but generally they're looking for the same industry. Or
right.
if you had a I used the carpet cleaning business in, I don't know, in San Diego, and you're going to move to Denver and start a carpet cleaning business there, there's going to be questions like, well, you don't have a history, you don't have a market. Who are going to be your clients? Are you starting anew? We can't use the income from what you were making in San Diego because you had done that, let's say, for, I don't know, 4 or 5 years. Now you come into a new marketplace. How can we document consistent income? This is a totally new location for a business, right? So
Right.
most of people don't even realize that that's a thing, right? Until they get to the lender and the underwriter. Yeah, okay, great. He's been self-employed, had a carpet cleaning business, but that was over there. What about here? Right? I was like, there's no documentation that he can make the same amount of money, right?
Yeah.
So anyway, those things kind of happen.
Yeah. So yeah, the bank's going to definitely say no. We have more flexibility, but it's still a risk for us too. So we don't want to put
and that's what we asked the
position.
question. You had that one client that I think they wanted to go from Oklahoma to Texas, was it? They were going to sell their business, or
Missouri
they were
to
going to have
Oklahoma.
manage their business, right?
Yep.
From one state to another.
Yep.
And there was, that can happen too. It was like, hey, I'm retiring. I'm tired of, I don't know, the Chinese food restaurant, and I'm going to have somebody else come in and work the business in one state, but I'm going to relocate to, I don't know, sunny Florida, right? And I'm retiring, but that business is still going to be active, and whoever's going to run it for me is going to make me payments or pay me out of that, right? Okay, that's basically a situation that, well, are you going to get the same amount of money? How do we know that, right? How do we know that the person taking over managing doesn't know how to run a Chinese food restaurant or whatever, right? So yeah, so those are the questions most lenders are going to ask those. That's about that situation, and they're going to say, I don't think that's going to work for us.
Yep.
So stuff like that.
Yeah.
All right. Let's see. No questions yet. No questions in the chat.
Everybody's asleep.
Right. Everybody's asleep. Oh, they're probably watching college basketball.
Oh yeah.
That's what it is. All right. Anything else you want to add? Anybody else? I mean, so why agents and lenders should learn more about rent-to-own programs? Okay, so we talked about from an agent's aspect, from a lender's aspect too, right? From a lender's aspect, you should know how programs work, because most lenders are going to say, hey, well, they don't qualify, then I'm not going to get paid because there's no loan that anybody's going to be able to do, right? How do I get paid on that, right? So how would you answer that if a lender? And I know you reach out to a lot of, you market to lender and you talk to a lot of lenders. So when they ask you that question, they go, well, how do I get paid? There's no loan.
It's actually there's two ways that lenders can get paid as opposed to one with agents. So let's talk about that, and we'll come back to the agents, how they get paid. But so lenders, we're getting them into a home now, and you've got somebody that needs a loan, not just wants a loan, not somebody that you had to put on a drip or call and catch up with them, send them to credit repair, all the things that you would normally do if you couldn't qualify them. Now you got them in a home. You've helped them, and they're going to get a loan from you in the future, and we follow up with them. So you've got this one in the pipeline that they need that loan. So, and then for us, we buy the home in the first place. We need a loan too. So as an investor, we're going in and getting a loan. So you can get one on the front side and then one on the down the road. So you're kind of double ending it like we do as agents if we got a buy and a sell. So anything to add to that?
Yeah, definitely. Right. So if you can provide that service as a lender, even though you can't get them a loan today, what'll happen is there's a commitment from our end. And then also there's a tie-in, right? There's a relations that you built with this client that you couldn't get qualified. You're going to say, oh yeah, he solved my problem, or at least he knew how to solve my problem. And he still got me into the house, even though he said the lender wasn't going to approve us anyways. Right. Mm-hmm. So that's so valuable, right? They're easily going to come back to you because they say, hey, this guy knows what the heck he's doing. Yep. Right. Or she, they know what the heck they're doing. They know this, and they're going to be able to solve it for me. Right. And yep. We as a company, we're going to say, hey, you brought us that client. We're going they're going to need to get their financing in a year or 2 or 3. We're going to send them right back to you. And, as we say, not only do you need loans today, but you need loans next year and the year after that and the year after that if you're a lender, right? So unless you plan on leaving the industry altogether, then okay, that's something else. But if you're going to be a pro and you're going to stay in this industry and have lasting power, you're going to need deals in the future also. So these are loans that people are going to work towards fixing so that they can qualify, and you're going to get a loan out of that. 2, we get leads all the time, right? We get leads all the time to somebody that says, hey, from our social media or marketing. And if you're a lender and you're marketing, right, we get leads all the time. Somebody that's not tied to a lender, not tied to an agent, and they're interested in our rent-to-own program. Well, potentially that person, they're going to need a loan. So if you're bringing us business, I know, Joe Lender over here, he's sending me stuff constantly, and I got a couple of people, I'm going to send them right back I'm going to send those people to them too. It's like, hey, it's a relationship business, right? We work together, we build a relationship. Hey, you're sending me stuff, I'm sending you stuff. And that's what makes this go. And then from the investor aspect too, right? You could be a lender that works with a lot of investors, or maybe that's something you should be looking into. If you haven't worked with investors, you only work with, entry-level buyers, first-time home buyers, owner occupants, maybe you should get familiar with investor loans potentially and say, hey, are you, if you're looking to get financing for investment property, potentially I could have potentially we can have a client that could be a fit for them to place into that property that they buy, and you get a loan out of that, right? The investor loan, it's still a loan that you could get paid on.
Yeah. And investors typically do more than one deal every 7 years or whatever, maybe one every year. So there's a lot of potential loans. Well, as an example, one of my friends that's done the most investing with us, he had like 7 loans within about 2 years with one lender. That lender loves us. So yeah, a lot of opportunity. And I was going to bring up too, we're talking about sending some of our leads to lenders. I had somebody sent to me, it was an agent. It's like, hey, I got this friend that can't get a loan. And I was like, okay, well, first thing we need to see if they are fit, and we're going to get with a lender. And he hadn't sent his friend to a lender yet. So I sent him to a lender that I like, Joe Lender, like you said. The guy's like, oh, no, I can do bank statement loan or whatever, a non-QM type loan and get him in the house. It's like, oh, great. So this agent that sent him to me, he was able to just go help his friend right away and didn't have to do rent to own. So
right, yeah. So you as a lender, right? If you work with us, we're going to work with you, and just the same way that you get leads, we get leads that aren't tied into either a lender or an agent right now, right? Because people just walk off the street. They may see stuff, they see marketing and whatnot, but your website, my website, our social media, your social media, we get leads that way as well. And so if there's a relationship that needs to be built, there is a part in the process that we can share and or refer somebody to, then definitely that's the aspect of this business. You have to be able to reciprocate, right? And it's a working relationship. That's how things get done. So, all right. Well, I think we covered that. I think and then you wanted to come back to the agents, right, as it relates to how they get paid.
Yep. So, when we buy it with our investors, there's a buy side commission there. So you get paid a portion of that. We give most of that buy side commission back to you for bring that buyer. So everybody's happy. We got them in a house and got a closing without having to wait 2 years, put them on a drip, all those things, especially with the way things are right now. It's like everybody's hurting. So if we can get some closings now and not have to wait, it could be the difference between staying in business as an agent or going and getting a W-2 or whatever you got to do. Drive Uber,
Yeah, I mean, and then there's more people that need this more so than ever, not just as a lender or agent, but also as a client or a buyer, right? Because some people are speculating. It's like, okay, if I wait, right? We constantly talk about it's like, hey, you wait and rates go from 7 to 5, there's going to be a rush, right? And for the people that are trying to buy a home, let's say they're waiting just for the rates to come down, well, you're probably going to get priced out. Right? Yeah. If you barely have enough for, let's say you only have the minimum for a conventional or FHA, you're going to end up competing with a lot of the other people that have deeper pockets than you do.
Yeah.
So
we ended up overpaying like we saw during COVID.
Yeah.
And then what if you got to move? Now you've overpaid and you don't have any equity and you're going to take a loss. Might have to get short sale or something. That's not a good position to be in. So if we can get you in now, even at the higher rates, it's a better situation.
Yeah, if you can afford it, forget about the rates. If you can afford it, get in, because your payment can only go down, right? I mean, basically terms these days are, hey, you kind of locked into that payment, and unless you do something else, I guess. If you let's say you bought it and then you cashed out, refinance, you got a higher loan amount, obviously your payment go up. But generally, once you've locked in, basically the only time you're gonna refinance if the rate comes down, and then that lowers your payment, right? So, and nobody's really doing any adjustable. I mean, they're out there, but generally people aren't getting adjustable rate loans like we used to have that in the past. Everybody's kind of shot away from all of that. But right, if you're locked in, you're only going to refinance if your payment goes down, not if the rates go up, right? So you're locked in. So your payment can only go down; it can't go up if you get it now.
Yep.
But I mean, that's just the simple reality of it, right?
Yeah.
All right. Any closing thoughts as we kind of wrap this up?
Yeah, there's a lot of opportunity out there to actually go market these kinds of programs to people. Because if you're fighting over all these other ones that can get qualified, there's opportunity to open it up to people that fit these programs. So I have some graphics that I can share with you to go put on social media, send out to your email list. Another thing you could do, if you know anybody that's left the business and has a database of people that aren't being serviced, go back to them, and maybe some of them fit rent to own. So you could take those graphics or any kind of messaging and try to drum up some other business. So that's
definitely right. So you don't have to recreate the wheels. So if you're curious out there, hey, how do I market this as an agent? Reach out to James. He's got some marketing tools. You can follow us. You can follow me on my Instagram, and I do a lot of posting for rent to own. And all you have to do is just repurpose what we already creating, right? You could take the reel or the post and share it to your story, or recopy it, repurpose it, and just put your name and your phone number on top of that. Just say, hey, new rent to own program I just found out about. Like, call me. I'm Susie Realtor at 12345, whatever your phone number is, and I'll get you the information. And that leads to somebody potentially calling and say, hey, yeah, I'm interested in that. And then you can have the conversation with the clients, like, well, why do you think you need to rent to own? Or have you been qualified? Or no, this is my first time looking. Or yeah, I was told no by this lender because of this, right? So that's a potential lead source. Just repurposing what we're doing.
Yeah, that's a great idea. Yeah, go follow at Mr. Rent to Own Homes. Yeah.
That's
you
right.
post all the time. I should just steal your stuff.
I tell you, steal my stuff. I tell everybody that. Just steal what we're doing, right? I'm constantly thinking about it. How do we market? What's the messaging? Messaging for clients and messaging for agents and lenders to use that information to market themselves. You don't have to recreate it. If you feel comfortable that you know enough, hey, you can do a live, you can do a short, you can do a little recording, you can do it as a post, right? Or tag us or whatever, right? There's so many ways to doing it, right? You don't have to recreate the wheel. Use us as a source to market it. And does it mean you have to market it every day like we do? No, but you can, a couple of times a week say, hey, rent to own, you've been turned down, let us know. I have potentially a program for you that may be a fit. Reach out to me. Right?
Yep.
All right. So if there is an agent or a lender that wants some of the marketing stuff, James, how do they get a hold of you?
Go to the link. If you're on video, you see it, Linktree/partner with James Brown. And I've got all sorts of links. You can find me there, and I'll send that graphic to you.
Cool. Yeah, definitely reach out to James if you're an agent, especially, as it relates to markets, right? So I know you're in the Denver market, and you may, licensed in Colorado. I'm licensed in 12 states as a lender. So we can do the program in basically all those states. So if you're an agent out there in another state that is in Arizona, is in Colorado, we've done them in other states too. So rent to own does work in other states too. Obviously, it's the same criteria. And if we find a couple of boots on the ground agents in a particular market that we haven't done any in, then we can kind of roll it out. To be honest, I can roll it out in about 45 to 60 days to basically hit a new market and start promoting it there. If you have enough demand, then you can be our person in that state, right? I'm going to need representation. Our investors are going to need representation in the states to buy those houses. So who are we going to use? The people that are bringing us potential clients in their market.
100%. Cool.
All right, everybody. Well, thank you again. James, thanks for joining me today. We'll chat again next week. Next topic. For all you out there, thank you for joining us today. My name is Dominic Danino, aka Mr. Rent to Own Homes. My contact information is in the description on YouTube, and my Instagram is Mr. Rent to Own Homes on both Instagram, TikTok, and reach out if you have any questions. That way we can get a hold of you and see how we can help you either market, or if you have a client specific scenario, you can run it by us, and then we'll go from there. All right. Take care again. We'll see you next time. Bye-bye.